So depreciation is also one of the business expenses because um, you are charging the the consumption of the asset that you are using. You are charging that consumption to your business profit. So whatever profit that you are getting, you are charging that expense to it. So we treat depreciation separately. So depreciation is also one of the expenses, and it is under general and administrative expenses. So let's give it a figure, say 2,000 as our depreciation for the year. We have rent and rates. So probably the entity is renting, right? The companies or the entity's office or their warehouse or some accommodation, the entity is renting, and so they also have to pay rent to other landlords. So that amount that they pay is the renting rate, which is also an expense to the entity. It must be charged. So let's say 1,500 as the rent and rate expenses. Insurance. The company is required by law, or the entity is required by law to insure assets such as car. When you buy motor vehicle or a car, you have to insure it. It's compulsory. It's by law that you have to insure your assets. So when you insure these assets, that cost becomes a business expense, and it is also charged under the general and administrative expenses. So you charge the insurance cost to your business expense as well, because you incur that expense as you running your business. So let's give that one to a figure, say 3,000 insurance cost. So we have to also add all of them like we did for the selling and distribution. So the total general and administrative expenses is going to be 8,000 plus 2,000 plus 1,500 plus 3,000. So let's add all of them and see what we will get. So when we add all these four items, we are getting 14,500. So this is our general and administrative expenses for the year. Finance cost. Finance cost. So the finance cost, we are looking at the cost that we incurred in terms of financing. So when you go in for a loan, you know, you incur costs on you going for the loan, because nobody will give you a loan for free, right? So they give you a loan and then they take their interest either monthly or annually. So the interest on the loan is a finance cost. That is the cost of borrowing. That is the borrowing cost. So borrowing cost is a finance cost, and so it must also be presented. So let's assume that in the year we paid interest of say 2,900 on. You can also have another finance cost like bank charges. When you transact any business through the bank does take a small portion of your money as charges. So let's say you have your money at the bank, you do transactions, and you instruct the bank to make some payments on your behalf and all that. They send messages to you and all that. The bank will take a small portion of your money as charges for the services that they are rendering for you. So even individuals that are not companies, when these banks send them messages for monies that they have received and money that they have paid out of their accounts, they take small amounts of money from their account as charges. So these charges becomes they become cost. These charges become cost to the entity, and so that charge must be added to the business cost, and it's an example of finance cost. So let's say there were small bank charges of 800 cedis for the months. So let's add these two items to as our bank. That is the bank charges, and then the interest on loan as our finance um, expenses. So these two give us 37,900. And so this is our finance cost. This is our general and administrative expenses. This is our selling and distribution expenses. So when you add all these three and you take it from our income, then we get our net profit. So the total expense is going to be the selling and distribution added to the general and administrative expenses added to the finance expenses, which is 23,200. That is the total expenses that we incurred for the year or for the period. Now, to determine the net profit, it's going to be the total amount we realize here, which is the gross profit added to the other incomes minus the total cost that we incurred for the period. So that gives 20,500. So the 43,700, which is the addition of the gross profit and then the income that we gain for the year. When we take total expenses of 23,000 from it, we get a net profit of 20,500. So this is how the profit or loss account can also be prepared, which is very easier. The same way we prepare the trading accounts. So guys, this is the whole trading profits or loss accounts. Very easy and very simple. So we urge you all to subscribe to our channel. Those of you who have not subscribed, subscribe to the channel so that anytime we present some of these videos, you will be the first person to have access to, and also we keep on sharing for others to have access to. So thank you for watching. You can send your comments. You can also share as well. Thank you.